It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Monday evening, March the 21st, 2016. Welcome back to our nightly newsletter. Hope you guys had a great weekend. Cracking open this fourth week of the month of March. Got another big week ahead of us here filled with learning and earning opportunities. Let's not waste any time here. Before we jump into our chart tonight, we got crude oil is bullish, but we have two big clues telling us to wait for a trap low for the most reliable buying opportunities on the oil tomorrow. The E-mini S&P is bullish as well, but a sloppy session today tells us a lot of buyers probably missed this move. We'll be looking for bear traps at the lows for the most reliable trades on the S&P. Crude and the S&P looking pretty similar. Looking at gold, gold is bearish, but with a recent overshoot of the lows and a triangle on the chart. We're waiting for a bull trap up at the highs for the most reliable trades on Tuesday. And of course, the euro is also bearish, looking just like the gold here, but it's trading at the lows of the range tonight on the euro. It's a horrible place to sell the lows until we see some proof of buyer failures for tomorrow. I got a great plan for crude, S&P, gold, and the euro. Before we jump into our charts though tonight, I do want to remind you guys to make sure you're watching this video on our trading blog here at sidewaysmarkets.com. The only place to watch the full-length version of our nightly newsletter is right on our blog at sidewaysmarkets.com. If you're watching the video on our YouTube channel right now, that's wonderful. Tons of great trading videos on our YouTube channel. But the full-length version of this newsletter, go into the description of the YouTube video. There's a link in the description that'll take you over here to my trading blog where you can find the full-length version. While you're here, don't forget to grab a free pass and come out and join me in my trade room, and you can learn more about what it means to be a student here at School of Trade. Right below on the left-hand side, you'll see a spot to join the newsletter mailing list. Make sure you register for our nightly newsletter mailing list. You need your name, your email address, and when you hit the submit button, make sure you go verify your inbox. I'm going to send you a verification email to make sure you give me approval to keep sending you an email every evening. And every evening, I'll email you when that nightly newsletter goes live that you'll never have to worry about missing another newsletter ever again. Right below the video tonight, you can download all the charts you'll see me using in tonight's video. Right, all the charts in tonight's video, you'll see them available for download. Follow that link right below the video, and then over on the right-hand side, I will encourage you to learn more about all the different ways that we trade here at School of Trade by joining our free trial membership. It's not the same thing as your free pass. The free pass will get you in the back door into our trade room as a guest. The trial membership, of course, will teach you all about what it means to be a student, and of course, all the different strategies that we trade here at SOT. And then don't forget, no question too big or too small. We've been helping new traders for over 12 years here at School of Trade, and we have a live support button there on the right-hand side of the blog. Click on that live support link and ask as many questions as you have. We look forward to answering all your questions. You ready to rock? I hope so, because we're moving forward here. Looking at the economic news for tomorrow. Tomorrow is Tuesday, March the 22nd. Just got one big news event on the calendar tomorrow morning, and it's really not that big of a deal. The PMI index flash at 9:45 a.m. It's kind of a minor news report. That's all we got tomorrow morning on the calendar. So the big news of the week will be coming later on this week. We got home sales, durable goods, and of course GDP. Just a heads up, guys, we do have the cash markets closed on Friday. Electronic session and futures markets will be open on Friday. That is Good Friday, of course, going into the Easter weekend. We're going to talk more about that in tomorrow night's newsletter. Today was a little bit low volume, and it kind of felt like that Easter weekend, which is Easter Sundays coming up on the 27th, right? So that felt a little bit Easter-like, but we're going to see what tomorrow looks like, because I think today was a Monday, so it was difficult to really pin it down as far as why the volume was so low. Crude was great all day, but the S&P, gold, and euro definitely were lower volume today. Bottom line is we'll be opening up our trade room tomorrow morning at 8 a.m. Eastern time, and we'll be looking at these charts live in real time tomorrow. You got news at 9:45, and we'll play it by ear tomorrow based on what we see tomorrow. Let's jump into our charts now that you guys know the news schedule for tomorrow. Start out tonight with crude oil. We'll go to the S&P. We'll go to some gold, and we'll wrap up with some euro. Crude oil, first off, is bullish, but we have two big clues telling us to wait for a trap low for the most reliable buying opportunities tomorrow. We have a bull channel, a trading range, a triangle, and a measured move to work with tomorrow. The bull channel tells us to look for rotation from the lows up to the highs of the channel. The bull channel tells us to look for rotation from the low up to the high. As you can see here, we're rotating from the low up to the high, back down to the low, back up to the high, right? So bull channel tells us to expect rotation. It also tells us that if we fail to complete that rotation, right? If we go lower from here, now that also becomes an undershoot, and we'll be looking for an overshoot about the same amount, right, on the opposite side. So keep an eye out for the undershoot into the overshoot. Funny you should mention that, because that leads right into the second component on the chart tonight, the trading range. This tells us the sellers will try to rotate price back to the lows of the range, which means the buyers will be looking for sellers to try twice and fail before they buy. Let's talk about this trading range. What do we know about a trading range? Well, first of all, there's a bullish bias going into that trading range. See how the market was moving higher as it goes into that range? That tells me that buyers are going to be looking for traps down at these lows. It also tells me that buyers are going to be watching very closely for sellers to try once, try twice, and if they cannot complete that rotation back to the low of that channel or back to the low of that range, they will attack and send price back to the high of the range, 41.72, and then of course up we go to the measured move and the range expansion target, which is the ultimate target for range traders. So once again, the trading range is a bullish bias to it. We know that trading ranges, just like channels, have rotation from the low up to the high, back down to that low, up to the high. Where are we right now? We're at the high of that range. Where should we be going next if range rotation is correct? We should be going back down to that low. I'm going to give those sellers 2 tries, right, to get back to that low. If they can't get back to that low, price will expand higher, right? And where will it go? It will be shooting for that range expansion. Right now, the balance area is between 41.72 and 40.84. If they can't complete the rotation back down to that low, it will move into the next balance area and try to achieve its range expansion target. Now, obviously, if it tries once and tries twice and can't go back to that 40.84, the initial target will be back at range high at 41.72. The next target will be up at the measured move at 42.19. And of course, then a final long-term target up at 42.60. So we'll make sure we use the overhead resistance areas at short-term targets. The bottom line right now is that trading range tells us we cannot be a buyer at these highs. If price goes higher without us, we look for sellers to try to sell it off these highs and fail for a buying opportunity. The bottom line is, if it goes higher, we can't buy high. We want to wait for price to pull back, look for sellers to try to chase this move going lower. If they fail to go lower, we'll be right there looking for failure into strength, into pullbacks on the way going higher. The most reliable trade, though, is going to become after once, twice, right, and failure, so we're not buying near the high. It's also worth mentioning that for this trading range, if we do find ourselves all the way back down to that low, look for the sellers to try once, look for them to try twice, and then we'll look for a failure opportunity to buy the low. Trading ranges are really, really valuable clues. The most important thing is the directional bias tells us to be a buyer here. The second important clue is rotation, back down to that low. That tells me I don't want to buy these highs. What if price goes higher? If price pushes higher, we look for a bear trap at the high. In other words, we look for the pullback. There'll be sellers that will try to sell the retracement, and if they're successful, that's wonderful. But if they're not successful, that will give us a chance now to buy into their stops, helping us to achieve a more reliable opportunity buying. Just don't buy at the high. Wait for the new higher high, then buy it on a pullback. Remember, we don't just trade patterns, we trade situations, right? As the market tries to break higher, we can't just buy that. It's going to pull back. When it pulls back, sellers in the very short term will try to sell it lower. we're looking for them to fail, and that's going to be the most reliable trading opportunity to be a buyer if it goes higher. If it goes lower, watching closely, watching for 2 attempts to go lower, the second attempt fails, that tells us to start buying back to the high, and that tells us to start looking for trading opportunities, right? Again, with everything we've discussed so far on the way back to those range expansion. The real opportunity is going to come if we can get down below that 40.84. We get down to the low, sellers try once to break it out, sellers try twice to break it out. We call that a second try failure. Remember, the 2-try rule, very, very important when it comes to a trading range. Sellers try and fail after 2 attempts to break out of the range. That's going to be the most reliable trade down at the range low, right? Range low, buy the low of the range in a bullish market. Very reliable buying with seller failure at the low. It's going to be a little bit tricky if they don't make it back to the low. We'll watch that closely in real time tomorrow. The hardest trade will be if it pushes higher here because we don't want to buy the high. And we don't want to buy that pullback because oftentimes it collapses back down in. The best way to do it is, like I said, is to wait to see if that pullback sellers fail and then buy it from there. The triangle, I think, is the biggest clue on the chart, and this gives us an area of interest for the breakout pullback. Triangles, and we've got a couple of these in the charts tonight. We have a bullish triangle, as you can see right now, and I think this really is the most important clue if we don't end up all the way back down at the range low. Obviously, if we get back to 40.84, we're looking for seller failure at 40.84 to buy the low of the range. That's the most reliable trade. But if we don't get down to that range low, for example, if we come in, try once, try twice, right, that's where this triangle, I think, is really going to come into play here. First of all, we have a breakout. The ideal scenario is to wait for price to get back to the point of that triangle and then look for buyers to enter, right, for what we call a breakout pullback, a continuation from that triangle. Here's what you got to be aware when it comes to a bullish triangle. And don't forget, we're going to do all this together tomorrow morning live in real time, so you don't need to do this all on your own. Okay, bull triangle. First of all, the most reliable trade will always come with a trap low. Think of a triangle like a trading range, right? It's just like a trading range, except it's getting narrower. Right? So we know we have a bull bias to that trading range, a bull bias to the triangle. Just as we talked about with that trading range, the most reliable trade is going to come with sellers trying to sell and a failure at the low. That's where we love to buy, right? It's called a bear trap. Seller failure at the low of a bull triangle. Makes sense, right? Buy low. See how easy that is? When you apply that same idea of buying low, you can see why this is the most reliable trade. The next reliable trade is going to come back at the point of that triangle. And ultimately what we're looking for price now to break out, pull back, and give us a nice strong signal that we can rely on here. If we don't get a good signal, sometimes what happens is it'll pull back, it'll crash through it, the sellers will try, don't forget the directional bias, and then we're looking for those sellers to fail so we can then buy into their failure. The bottom line, though, is the tip of that triangle creates a time frame for us. So now back to the chart. Now there's the tip of that triangle. We got our breakout, our pullback, and go. Again, if it breaks out and goes lower, you know that 2-try rule is going to be in play to get down to that 40.84. Right? So wait for those sellers now to try twice and fail. Now give you another shot, right, to buy using that point of the triangle. Okay? Stick to the upside for now until the trend changes. Again, the most reliable trades are going to come right around the point of the triangle. Look for sellers to try twice to make it go lower and then buy into their failure. Down at the low of the range, sellers try twice to take it lower, buy into their failure. And again, if it goes higher here, don't take the bait buying high. Wait for the pullback. The pullback will be chased from sellers. If the sellers fail, that'll be your next and your least reliable trade will be that breakout pullback. We really would rather see the price go higher here. Now, measured moves are targets. Previous highs are targets. Range expansions are targets. Don't get greedy. Take your profit, the appropriate areas overhead, and come out and join us tomorrow. We'll be trading this market live in real time. Now, that's the easy one for the night. The rest of these markets, like I talked about before, they are pretty low volume. The E-mini S&P, gold, and euro, they're all relatively low volume, so they're going to be a little bit challenging. You're going to see what I'm talking about here in a moment. The E-mini S&P is bullish, but we have a sloppy session today. If I took all this stuff off the chart right now,